Hello, John Jerkovich here, Ask the Loan Guy with another installment, and today we're going to be talking a little bit about Dodd Frank. I did a video on this in the past, and just wanted to kind of bring it back up to speed here in that it seems to be in the news an awful lot. And it also seems that you have to kind of take your stand based on what side of the political spectrum that you sit on as to whether or not you're in favor of this or not. So I just wanted to kind of highlight some points here. Take it as you would want, but it is what it is. So the regulation was kind of put in place because at the time there was a couple of premises. A, the banks had gotten wild and done whatever they want, made a whole bunch of bad loans for people that they had no intention of paying. And there was also kind of just an underlying premise at the time that people were not really smart enough to make good financial decisions themselves. So they went through and put in a bunch of legislation. And it's led to, as I mentioned in my last video, lower home ownership rates, a variety of different things. But I just wanted to give you an illustration of kind of before Dodd Frank and kind of today. And I drew some pictures, and these are pretty fancy. I think my kids will love these. But back before Dodd Frank, you can see the bank over here. He's looking kind of happy. He's got some spiked hair. And our little home over here. The bank wanted to make some money. I've got it $2 signs here. And the homeowner, essentially, there was a fairly straight line. They passed on their cost over to the homeowner, and everybody was happy. Maybe not perfect at that time, but the loan closed, and maybe the disclosures weren't perfect, or they didn't always know exactly what was happening. Let's hope that their loan officer did not do that. I'd like to think that my clients were always well aware of what was going on, but that was back then. Now here today, I've got another fancy illustration. These are really good. This is the banks today, and you'll notice that our guy from before, he's now lost all of his hair, and he has red eyes from all of the regulation, and he still, though, wants to make the same amount of money. What you have, though, is you've got a lot of other things. So a qualified mortgage came out, so there's a lot less options for the homeowner over there. The CFPB has no judicial oversight, so nobody's looking out after them. They're fining people left and right. That costs, there's a little dollar sign there where you've got compliance. Most companies now have to employ a chief compliance officer just to muddle through the 1,200 pages of laws that is Dodd Frank. We rolled out TRID, which was a disclosure practice that, again, costs mortgage companies, banks, everybody out there some additional money. And the last thing I have here is guidelines. It's much harder to get a loan today. So clients maybe that are on the fringe or some of those kind of things, there's a bunch of additional guidelines, which has driven up or really eliminated a lot of people from the market that would traditionally be homeowners. So the bank still wants to make X. Our little homeowner over here is now paying $4 signs for the same loan that she would have versus $2. So the intent of the legislation at that time was to protect the homeowners, and I think had a lot of great things about it. The net result, though, is possibly it was a bad piece of legislation. And as with anything, you go through a crisis like we did back in 2007, 2008, and there's a tendency for the pendulum to swing far too much to one side. And ultimately, what I believe that most of the changes are going to happen here, it's not looking at giving the banks, carte blanche to do whatever they want, lend to whoever they want. I think that they learned their lesson, but it's easing the guidelines, making it a little bit easier for banks, consumers, kind of everybody across the board to transact and do business. And I believe that's kind of the American dream here, right? Home ownership, being able to go out, make a good living, and do those things day in, day out without the government coming in and interfering all the way along the way. So that's my 2 cents on the Dodd Frank update. I would not look at this as a political thing. Either you believe that consumers are able to make good, sound decisions regarding their financing. The banks will have additional regulation. It's never going back to the way it was before. Or you believe that the government kind of needs to intervene and make sure that they're dictating what people do in loans and with their loans. So that's it. Any questions, concerns, please email me at john@asktheloanguy.com. You can like, comment, share, reply to this message, get the word out there. Any questions you have, would love to hear them. Thank you for listening. Have a great day.